Yeah, hello there. It's Somi Adiagbo. The market is about to open for a new trading week, so I decided to share with you some of the things I'm looking at on my chart, some analysis that I made using the Elliott wave theory. As you all know, that Elliott wave theory is such a very wonderful technical analytical tool that we use to forecast price movement of any financial market. Elliott wave believes that the movement of the price of any financial instrument is actually more often than not determined by the mind psychology of the participant. And when you look at this mass psychology, they are being put together into what looks like a kind of pattern. And these patterns are spiral in nature. That means in a particular pattern, you see similar patterns, and all these are put together in a well-defined structural analysis, which we call the Elliott wave theory. So I will use that the Elliott wave theory to actually look at some currency market. Okay, right now. The first one I have is the Australian dollar US dollar, and there my chart looks somehow messy. Let me remove some things that are not needed there. Okay, we could see that price. Okay, the this move from here was actually a five wave advance. We saw the first wave and the second wave here, and then we saw the third wave well extended, the fourth wave, and then we saw that move actually ended here, and then price went into a series of corrective moves since then. And then look at this is a double zigzag pattern. Okay, this is a ABC, this is W X, and then another ABC ended around here. Okay, so this is a very good corrective move that falls very well within a falling channel. Okay, one of those things that we use to distinguish between a multi-wave and a corrective wave is the fact that corrective patterns are often well contained in the channel. So whether the triangle or the flat or the zigzags, they are often contained in the channel. And so we have here as well, and price has actually broken out of this channel. So what we have right now is, after this break now, we expect price to go upside. Okay, so in the longer term, we may think this as wave A, wave B, if we're actually looking corrective. Okay, or we could take this as wave 1, then wave 2, and then probably we are waiting for Australian dollar user to start a fresh wave 3, which is going to go so much high. Okay, but at this moment now price broke out of here. What should we be expecting? What should be our expectation this week? You can see that after this this move out of the channel, we were about to see a kind of a corrective move before the market closed last week. And then we go to the 15-minute chart, we could see that price has actually ended a first move upside, a kind of a 5-wave move with this kind of a wave 4 pattern, a kind of flat, and then we saw the 5th wave, and we saw price actually responding to that. So what we may see this week is the price may correct down to this region. Okay, this region here. Okay, before it continue moving up. So this would be a very good opportunity, a very good level to look forward to buy Australian dollar US dollar, but the stop loss must be here. Okay, so I'm actually going to update you as the event unfolds this week. All right, now let's go to Australian dollar, New Zealand dollar. If there is one currency pair that's actually giving us a lot of trouble in the last couple of weeks, it's actually this one. Just when you think that the impulse wave has completed here, or even here, or maybe even here, you see price even getting stronger, and that makes us to probably think that the move is still going to continue really upside. Okay, let me show you what I have. Australian dollar, New Zealand. Okay, this is what I have now. Okay, let me remove these lines. Okay, now this is what I have now. This is wave 1, wave 2, and then 3, 4. Probably wave 5 is not actually completed yet. This is the first wave, the second, and then maybe the third. Actually, probably the third is on its way with this 1, 2, 3, 4, 5 sub waves, and then we may see price correcting to this level at the beginning of the week, and then it further rallies before we now see a dip. Okay, and if you look at this trend line here, this falling trend line here, we may probably see price coming down to this trend. Look at this trend line here, this resistance trend line around here. So we may see price getting to that level, to complete this impulse wave. But we're actually waiting by the corner, for this one. We want to see price going up here and then put up a selling order. And then if this actually come up, then we're going to be waiting for price to come down around here, this region. So that's going to be a very good move. If price gets here, we're looking forward to a selling opportunity down to this side. So we want to price could actually continue the impulse wave with it gets here. So this is a well extended fifth wave of an impulse wave. So we're waiting also for this, and I'm going to update you as our event unfolds as well. So the third one is the Australian dollar, Canadian dollar. What we are seeing here looks really corrective, but it may still turn out to be an impulse wave. It may still turn out to be a multi wave. Let me show you what I have. One of the counts that I have. So this is Australian dollar, Canadian dollar. We focus very well on this move here. You can see that there is a 5-wave decline here. 1, 2, 3, 4, 5. And then we are seeing something that looks like a flat pattern, ABC. Let me label that ABC. Let me reduce that to something like this, ABC. So this is going to be wave 1. Charlie, this is going to be wave 1 with a black color. I love black for my impulse wave. So this is going to be wave 1, and then you may see probably this is the second wave of this move. The second wave, which is a flat pattern. And then we are seeing another 1-2 move here. So we're after this move here. Normally we'll be expecting a 5-wave move downside. And then this could be the first wave, the first sub wave of the third wave, the second sub wave of the third, which is actually a zigzag. And then we may see price breaking below this level, breaking below here, down to this side, for the third wave, before we see fourth and then the fifth wave move downside. So Australian dollar may actually go downside. It's actually looking that if you look at this very strong resistive zone here, this very strong resistive zone formed by the first and the second wave. Look at this, resisted here, resisted here, resisted here, and then this could actually bring price further downside. But we may still have another opportunity for price to come up here. If price could come up here, then we will have to be looking for a selling opportunity. And this is how our labeling is going to be like. We have to we may now actually have to look at this as a whole corrective move. With this 1, 2, we'll label this as 3, and then the whole of this as wave 4, and then this as wave 5 right here. So we have wave 1, wave 2, wave 3, and then wave 4 resisted by this boundary here, by this channel boundary here. Then we saw the fifth wave coming in. And what do we have here? We have what looks like what may later be a triangle pattern, A, B, C, and then D. Let me put D. So this is D. If price is resisted here, I mean supported around the D. Let me change that to red color. So this is D, and then we may have the last move to this side, which is going to be wave E of that triangle. And so if this pattern is able to complete just exactly like this, and this zone is resisted by price, then we are going to actually see Australian dollar, Canadian dollar falling. Okay, so no matter how you look at it, I'm actually thinking that Australian dollar, Canadian dollar is going to fall unless price rallies and breaks above this level. That is the only way that we have to think that this corrective move has ended. Okay, we may label this as a whole corrective move, probably a WXY or something like that. Okay, 5 flat and then another 3, another 5 wave, and then price to continue. But at this moment, okay, critically, I want to actually see Australian dollar, Canadian dollar coming down. Is either it goes up to complete a triangle here, or the other labeling that we mentioned, as in price coming down for the third wave, and then we see a pullback, and then take the fifth wave. I'm also going to update you as all these unfolds. Now the next one is the Euro Australian dollar. The Euro Australian dollar broke downside before the end of the trading week, and we have to actually still think, we have to believe that Euro Australian dollar has resumed this move here. This move, okay, this a very good impulse wave. Then we saw a corrective move, and then prices are actually going downside. Okay, it's going really downside. So Euro Australian dollar is going downside. Looking at from wherever I want to look at it, it's actually going downside. So we have to follow the trend. Now, let me show you what I have there. Euro Australian dollar. Okay, so let me show you that. So from here to here, see, this is the last leg of the long-term corrective move. Ended around here. This is the last leg of that move, and then price started a new impulse wave, a new motive wave, just from here. Okay, with this 1 2 3 4 5, and then what did we see here? We saw an ABC move. Let me remove this. Okay, an ABC move, a flat pattern, and this C, what does it look like? It looks like an ending diagonal, and then price has started moving downside. So this is the first wave, and this is the second wave. This is the wave 1 of 3, wave 2 of 3, and we are just in the wave 3 of 3. So this move is still very early. I mean, we are still in the third wave of this particular move. So this is the first wave, this is the second wave, and the price is taking the third wave downside. So this is wave 1, wave 2, wave 3, wave 4, and then wave 5. Okay, the third wave may end around this price region, that is between 1.4 and 1.39. okay, before we see the fourth wave and then the fifth wave. So Euro Australian dollar, we have a very bullish bias for Euro Australian dollar, and when we spot any trading opportunity, I'm going to update you. The next one is the Euro New Zealand dollar. Euro New Zealand dollar also looks like a very important move has ended around here. A very good pattern ended around here, and the price is actually responding to that. So let me show you what move that ended there. This is the Euro New Zealand dollar. Euro New Zealand, okay, Euro New Zealand dollar is here. So I look at what we have. Okay, from here we saw a very good corrective move, an ABC move. Okay, an ABC move, and then look at the C wave. That was actually an ending diagonal, a typical one, and price broke below. Okay, and now it's going downside. So we'll be expecting a 5-wave move downside for Euro New Zealand dollar this week and probably next week. So price as it goes may break below this particular, may break below 1.5 level. So we have a very bearish bias for Euro New Zealand dollar. And the next one is the CAD yen. So what does this look like? This also looks like a corrective move after this 5-wave move that we detected sometimes, and we saw the rally that followed, which we took advantage of. And now what are we having here? What kind of pattern? A pattern actually completed last week. Okay, a pattern completed, like this is a triangle pattern. Let me show you what I have on my what I have. CAD yen, where is that? Okay, CAD yen is here, and then look at what I have. The CAD yen, I expect the CAD yen to continue moving, to move upside. The reason is that we are having an emerging double zigzag. So this is the first leg of the zigzag, and the second leg of the zigzag was actually a very typical triangle, well formed, well arranged. It was actually a contrasting triangle, A, B, C, D, E, and look at it, and price broke above here, above the triangle. So we're expecting price to get to probably the 81 price region, or probably around the 81.4, 81.5 price region before we could see a move downside. So we're expecting CAD yen to continue moving upside, and if you want to take an advantage of that, and you want to take it at a very good price, now that price before the close of market last week, price was actually correcting, and then we may label this as a 5-wave move, 1, 2, 3, 4 with a truncated fifth, and then we may see a good corrective move to probably the 50 or 61.8%, somewhere around here. This is actually the 50% price level. So one may look for movement, I mean a kind of corrective move to 78.71 or maybe 78.5, and then look to a buying opportunity with stop loss below here. But we have a very strong bias for price to continue moving upside for Canadian dollar, Japanese yen. And then in the US dollar, Japanese yen, this move here, we were actually expecting a 5-wave move to have complete here, but right now we have to throw that away because price has shown us after this 3-wave move downside, in response to this to a divergence that we actually caught after this 5-wave move. We saw a divergence, and we actually expected price to break down, I mean to move downside in a corrective move. But price, instead of starting a good 5-3-5 move, it started with a 3 move, okay, 3 swing, a kind of ABC. And then looking at that ABC, ABC, what does that look like? We may have another ABC, and that is an ending diagonal. So we have to look at what price is actually telling us. We have to be be open-minded when it comes to analysis and trading, especially when we are using the Elliott wave theory, because we're actually following the actions of price to validate or invalidate a move. And when one count or one analysis is invalidated, we have to look at what else price is actually saying, so that we can key ourselves into the activities of price. Okay, now let me show you the US dollar Japanese yen. What I have, the US dollar Japanese yen. Where is that? Did I save that? Oh, I didn't save that. Okay, yeah, it's here. Okay. Now that is it. So this is we spotted a very long term ending diagonal which ended here, though we expected price to go below before the move upside, but it was actually a throw under, what we call a throw under in diagonals. And then after the throw under, we saw price moving upside in a very typical 5-wave move. This is wave 1, wave 2, and this is the sub 1 of 3, sub 2 of 3, sub 3 of 3, sub 4 of 3, and then the sub 5 of 3, sorry, is looking like an ending diagonal. After this 3-leg move here, we may see another 3-leg move, something like this. We may see 1, 2, 3, another 3-leg move this way, and then we now see the last one, okay, here. Okay, so it is when we see that 2, 3, 4, 5, we can now think of a bearish move to this level. Okay, for the 4th wave, and then we now look forward to take another opportunity upside to complete the 5-wave structure. Okay, so but if price breaks below here, we may have to go with the first count. Okay, I have to believe that 1 2 3 4, and we have the fifth wave here. Probably we have something like 1 2 3 4 5. Okay, so but we will keep our mind open for now and expect price to rally further upside before a break below. Okay, a corrective break, and then before we see the last move here. Okay, so we have other alternative count, but this is our preferred count, and then I'm going to update you as things go. The last one I'm going to be talking about is the US dollar Canadian dollar, and just look at this. Oh my god, look at this. After this, at the beginning of this year, we saw the US dollar Canadian dollar moving just falling, okay, so brightly, so fast. It was just it was really falling. Look at it from here. Okay, price was actually falling because at the beginning of this year, we saw the crude oil price trying to make a kind of rally, and as we all know that the US dollar Canadian dollar has a very negative correlation with the price of crude. When the price of crude is going high, you see the US dollar Canadian dollar going down. The correlation is so high, but it's a negative one. Okay, last year we saw the price of oil fell so serious, and that was why we saw the US dollar Canadian dollar moving in this kind of an impulse wave. Okay, down up here. All right, and then what happened at the beginning of the year, we saw the price of oil rallying from maybe something around less than $30 to 40 something dollars or so, and then we saw the US dollar Canadian dollar coming down. Then after that, probably around I think around that May this year, we saw price starting a long term, a kind of well elongated congestive move. You see this, it looks like a triangle, right? Does it look like a triangle? It looks like a triangle, A B C D E. Okay, and then if you look at this, if price is able to break below here, then what do you expect? Then we expect price to continue moving downside. All right, especially if the meeting that the OPEC the oil producers and the the OPEC oil producers and the non-OPEC oil producers, when they meet on November, okay, we may see some good news for the crude oil, and then we may see US dollar Canadian dollar falling further. Okay, so I'll actually put my money on this. This is just so sweet, and now it's just so sweet. Okay, let me show you the inherent wave pattern, the inherent patterns that we can see within here. This is actually a congestive move, okay, a kind of a congestive. It looks like a triangle, although I label it as a flat pattern. Okay, I will show you. Let me show you what I have. The US dollar Canadian dollar. Okay, where's the US dollar Canadian dollar? Okay, yeah, it's a US dollar Canadian dollar. So we want to look at this. This is WXY. I actually label this as a flat pattern. This is a flat pattern because actually the move from here was a 5-wave move, and you will expect an ABC correction. So this is A, 5-wave move, B, a flat pattern. You expect another C, a C, which is going to be another impulse. So let's see the patterns that are formed in within there. Let me remove this. Let me remove. Oh, thank God. Okay, fine. So this is what we have here. You can see that the W wave, which is the first leg of the flat pattern, was actually a zigzag, a 3-wave move, and then we saw another flat here, which is the X wave, A, B, C, and then look at the Y. The Y is actually looking like another 3-wave move. There's A, B, C, okay, and then look at the C wave. Okay, this may actually be a triangle. Well, a triangle, because triangles are made of 3 3 3 3 3 3 pattern. So this is 3, this is 3. We're having another 3 here, but I actually think if price can break below this level, that we may not see another rally, okay, up here. So that's why I actually built this as a WXY pattern. And if you look at this ABC, I mean the third leg of this move, you look at it very well, and especially when you look at this C wave, you will see that that was actually an ending diagonal pattern. Okay, ending diagonals are very powerful. I was actually looking at this as a leading diagonal in the first place. I was thinking after this leading diagonal we saw a pullback and then a move upside, but this is more of an ending diagonal. And what's the difference between a leading diagonal and an ending diagonal? Leading diagonal start at the beginning of a move, okay, and they are made up of a 5-3-5-3-5 structure, but ending diagonals appear just like the name indicates at the end of probably a motive wave or an ABC move. And those ones are actually 3-3-3-3-3. I mean, just like a triangle, 3-3-3-3-3 pattern. And you can see this is 3, this is 3-3-3, consider 3-3. All these moves are actually corrective in nature, and then price has actually broken out of here. So this is a very good opportunity to sell US dollar, Canadian dollar, and then because price may actually continue moving downside, break below here and start a fresh move. Okay, so so that is what I have for you today. For now, I'm going to update you, okay, as event unfolds. All right, this is Somi Adiagbo. I wish you a very wonderful trading week. Thank you very much. Bye.